Going to record the presentation. Today is Tuesday, October the 18th, and I want to make sure that everyone reads the disclaimer because this is not a trade along with Gail room. It is an educational room, and I treat it like an educational room. The most important thing is trading has large potential rewards, but also has large potential risk. So you must be aware of the risk, and you should never, ever trade with money that you cannot afford to lose. If I take a trade this morning in the room, it will be in a demo account. Okay, this is an educational room, and I'm not going to treat it as just a trade along with Gail room. Hi, Wepper. I am feeling somewhat better, at least than I was last week anyway. So we do have an 8:30 market report on the Canadian. We have manufacturing sales. And then on the USD, we have the CPI and core CPI month over month. So those are the three market reports that could affect our trading this morning. And for those that are unfamiliar with Traders Help Desk, we have the main site, which is Traders Help Desk, but we also have a blog. And on the blog is where I do a lot of articles and videos. So you can always get to the blog by going to the main site and then simply clicking on the blog link here in the menu bar. Okay? These are the three currencies that I will be looking at this morning. And we have the British pound dollar over here. These green and red lines are actually the floor trader pivot lines. And they're just standard floor trader pivots. Also have 3 moving averages on it. I have the Trend ATR. The dots indicate an entry signal. You also get an entry signal anytime the bar turns gray or white. Some of the platforms actually use white. These little hash marks, which I've kind of enlarged for you to see, would be stops, like a trailing stop if you were in the trade on the forex market. Let me status off the floor trader pivots for a moment in the moving average line so you can actually see these white dots. Anytime the white dots are plotted in conjunction with the plus sign, that tells us that we are in congestion. The only trades that you're allowed to take when the market is in congestion is when price is at the congestion dot or price is at the ATR. That would be the only two trades that are potentially available anytime you see the white dots plotted on the screen. Directly under that, we have the directional volume indicator. The directional volume indicator actually shows you all the buyers and all the sellers on each individual bar. The blue volume bar tells me that price has made a high. The red volume bar tells me that price has made a low. An inside bar is represented by the gray volume bar. And the magenta bar tells me that price has made what we refer to as an outside bar, meaning that the high and the low of the previous bar were both exceeded on the current bar. In addition to that, you have a hash mark that is either above 0 or below 0. And this actually indicates at the end of the bar, at the close, who was the final one that controlled the price. Was it buyers or was it sellers? If it is above 0, then buyers controlled it. If it is below 0, sellers controlled it. Directly underneath the volume indicator, I have a standard stochastics. It's a slow stochastics, and I only use that to identify when there is divergence on the stochastics or hidden divergence. Directly beneath that, we have the THD ADX, and it is a non-directional indicator. That means that if the market is going down, the ADX will still be going up, okay? Now, anytime we see this magenta dot, we are anticipating price to come down to the ATR. The ATR being this little plus sign that is below price or either above price. If the line is blue with the pink dot, we know it's coming down to the ATR. If the line is red with a pink dot, then it will be going up towards the ATR. In these, anytime price gets to the ATR, that is our potential entry point. If you see this red dot over here, notice that it's right at the ATR. That is because that is your lowest point of risk. Any questions on the indicators so far? So, let me status back on the moving averages and the floor trader pivot lines. Now, I am a big proponent of support and resistance. In other words, I really like to see the entry come in at an area that may support or resist price. So in the case of the euro dollar, you see that we have this red dot here that's telling me there is an entry. You also see that we are at the R1 level, and this is a typical area that's going to push price down. You also have an ATR directly above you. So you start looking to the volume indicator to see if you have volume divergence. In this case, you do. And all volume divergence is a decrease in the volume when price is making a high or a low. If you see the volume decreasing, then you have volume divergence. Take that off of there real quick. Now, in this case, you see that you had the volume divergence. You also had a potential entry. Now, if you see this little blue hash mark, that's where the trailing stop begins to kick in. Sorry about that. So if you were in this trade, this blue line indicates where you can trail your stop. And if price comes back up to this blue line, then you immediately would get out. Does everybody understand that? Now, do you have to use it? No. I think it depends on you as a trader and what type of trading you are doing. You know, typically most of my trades, I'm not in very long. Yeah, that's new, Wepper. I just added it. I haven't sent it out to anybody yet. I just finalized it. And I've been working with it for a while now. Yeah, the entry dots are new too. And it just seems like traders like to see that little dot to indicate an entry. And I mean, really, this is just absolutely your lowest point of risk. For example, let's say that, take this off. Let's say that you entered here. Well, it flips it over here, okay? You could have come out when it flipped it, or you could have used the congestion dot. Okay? But again, this is absolutely your lowest point of risk. And I think this kind of shows you what I'm talking about when I say the lowest point of risk. Okay? Because here you had an entry, and we're going to make this a yellow line because I don't have anything yellow on there. Okay? And then the price starts to move up, starts to move up, starts to move up, and you're out on this bar. Okay? Well, this is the bar that you come out on. And I'll just put that in red. Okay? So you went from here to here. Okay? Now I want you to look at this one. You were in right about here. Okay? And if you came out, you came out here. And I'm going to put this one in red and this one in yellow. Okay, do you see the difference here? This is a minimal loss, whereas on this one, you went from here to here. Okay? And this is what we talk about when we talk about, let's see, do right there. So this is your winner and this is your loss, okay? This is what we're talking about when we say keep your losses small, maximize your profits, minimize your losses. This is what we're talking about, guys. Okay? Any questions on that? Now, that's also if you're trading the actual forex. Now, if you're trading the binaries, okay, when you get this dot, and this is very easy on the euro US dollar, because this dot is at 09.95. Well, there is a strike every 4 pips on the euro US dollar. So let's presume that there was a strike at 95. I automatically know there would be another one at 99. 95 plus 4 equals 99. Okay, 99 plus 4 equals 03. Okay, so that means every 4 pips you have a strike. By going out just one strike, that's going to lower your risk typically under, $45. Okay, and very easily you can, at least make 100%. If it's a big move or you're anticipating a big move, you could actually, go out 2 strike prices. Your risk is probably going to be about $30. And those are the ones that you can actually make more than the 100%. You can make 150 or maybe 200%. But you've got to know that the market has enough power to move 8 pips on the euro dollar within that time span. Does everybody understand that? Let's see. Now the USD JPY is another one. It's pretty much the same way. And, I'm going to do this because we have the 8:30 market report today. Okay? And I expect the USD JPY to go down. So I'm going to go to the forex binaries, the USD JPY. Right now, price is currently at 104.04. So I'm going to select the 9 a.m. And this is going to be a little bit slow just because I've got so much running here. Now, I think this is going to go down. And anytime you see these little boxes that don't have prices on it, then you know you need to expand it. Now, it could move down from 104.04 down to 104, okay? Now, this is my potential profit, so I know that's about 50. If I come on down to 96, if I come down to 92, then that's giving me a little bit more than $30, okay? Okay. I don't know why I'm getting these errors. Okay, so here I'm at 67.50, so I'm just going to place the order, okay? Do you see how this is gray? That tells me I have not been filled yet. I'm going to go in and see if I can get it for this. Now I'm in. Do you see how this turned red? That tells me, hey, I'm in the market, okay? Now, we only have approximately 45 minutes for this, okay? It tells you right here, there's 43 minutes and 33 seconds on this, okay? And I'm anticipating it to come down to 103.92, okay? We were risking minimal, I think maybe $35 or something like that. But we also have a market report. Now, this is going to have to move down at least 3 strike prices for me to make a profit. Does everybody understand that? Now, what are 3 strike prices on the USD JPY? Well, it's 4 pips per strike, so 3 times 4 is 12 pips. Can the USD JPY move 12 pips in 45 minutes, especially during a market report? Yeah, it can. Ideally, what I would want it to do is actually come down to about 84. When I'm typically trading this, that's what I want, okay? So typically, I don't go out 3 strike prices unless I know I have a market report that will actually move the market down. Everybody understand that? It's a little bit early right now, but it looks like we also have hidden divergence over here between the stochastics and price. We need this bar to finish, and that bar doesn't finish probably for another 6 to 7 minutes. Ideally, what I would want to do or want to see is for this current price bar to close under the pivot line. We'll see if it does. Any questions so far? You know, just looking at the binary chart, I would want it to close below 104. Why? Because that gives me a 3-bar reversal. No, because the bars did not confirm that. Remember on the momentum shift, Wepper, the bar has to confirm it. These bars were all closing up, so this momentum shift was not valid. It's a very small detail, but it's one that needs to be met. If you're truly getting a momentum shift, then the bar would have closed to the downside. Those all closed up, so you don't have the momentum shift there. And we're just, yeah. Well, I love the momentum shift, so I make the same mistakes. And we're just going to wait and see what this does at 8:30. I'm probably going to wait and see what it does. You can. All you have to do is click here. Because we're short, we need to go down. So I'm just going to put one at 5. And we'll see what happens. Sometimes I set it at 10, sometimes 15. It really kind of depends on what the market's doing. Typically, the CPI, it's not a huge report, Weber, so it's not like it's going to move 100 pips in your favor. Um, 103.92, Larry. It was $66.75. It was right about $35 of risk. Just about 35. Let's go in. Let's see what the futures are doing this morning. You see that on the Dow, you're at the congestion dot on the 180. You know, unless it breaks through that congestion dot, I would probably anticipate it coming back down. But this is where the market report may move this down. You know, we just don't know yet. But I wouldn't be taking it until that congestion dot was broken. It did break it on the 45 minute, but it hasn't broken it on the other one yet. And typically, you know, if I'm trading futures and forex, I never ever trade the market reports. But with the binaries, I will, because I know right now the most I could lose was the $35 I paid on entry. It wasn't quite 35, but it's close enough. When you're going short, you subtract the average price from 100, and that gives you your risk. On the buy side, it's whatever this number is over here. And that's because on the buy side, you're counting up to 100. On the sell side, you're counting down from 100. They're expecting the CPI to come in at 0.3, which is higher than last month. And they're expecting the core CPI to come in at 0.2, which is lower than the previous month. And there you have it. Yeah, the core CPI came in at 0.1. Yeah, it is. Most people make the mistake of looking at the sell price to get to $5. It's the buy price that has to get to $5 because that's where my profit target is. If I do the working orders, the price is at 5. Now you can go in and exit anytime you want. For example, right now we've already made at least 100% on this trade, and you can click here and actually have this open. So if you want to exit early, you can actually do that as well. I'd like it to come down to about 103.80. We'll have to wait and see if it does. There's sound right. I'm just not talking. Does everybody have sound? Oh, okay. Okay, I just wanted to make sure. I would really like to see it break that ATR over on the 15-minute chart, which is right here at 86. Now, if you get nervous, you can actually click on the offer and that would change your price. Yeah, I'm still here. I'm just watching it. If you notice there's nothing on the offer side now, that's when you're locked into a trade. Because there's no one willing to buy to get you out of the trade. Anytime up until you see, like right now, you see 98.50, you can get out of it. But if this number goes blank, you cannot get out of that trade. That in the last 2 minutes of the trade, you're locked into it. Now on this one, you had a full loss on that binary, okay? Now, I want to show you something, and I know I've said it twice while we were in that trade. You could have taken 100%, and someone asked me about this yesterday. We went in here because we had the hidden divergence. In other words, price was making a lower high, but the stochastic was making a higher high. That's why we knew that the market more than likely would go down at that market report. But this was the key to it, that little ATR right there. And if you notice, that little hash mark was above 0. Do y'all see that? But you didn't want to take 100%. That wasn't enough. Well, with that ATR there and that hash mark above 0, you can't get greedy. If you get greedy, you will lose on the binaries. You had made 100% probably within 20 minutes of entering that binary. You had 25 minutes remaining, but you got greedy. You wanted more. The indicators, anytime, and I said this, get go, I said, the only trades you have when you see the congestion dots in the ATR, you take short from the congestion dot, you go long at the ATR. But you didn't want to take what the market was offering. You wanted more. More, more, more. Give me more. Does everybody understand that? That's the reason most of my videos, once I get to the 100% mark, I'm taking profits because I know the binaries. If you notice over on the euro dollar, you came up to the ATR, it gave you an entry signal and went straight down. Over on the British pound, you've had a long entry, a long entry, and a long entry. The only thing I would be willing to do on the Dow would be a short. And that's because we're at this red line. We're at a congestion dot over here, and we just had volume divergence over here with the ADX at 80. Oh, if I can, this one. So if you go to the indice binaries, you go to the Wall Street, we could do 10 o'clock. Most of my trades are about an hour, unless I'm trading the 20-minute binaries. The strikes on the Dow are 12 points. So for example, right now price is at 18,111. The 18,108 is at 54. 18,091 is at 67. And that's going to be a hard one because you have an ATR right there. And this is another one. It's not going to give you more than 100% more than likely. But you got trend divergence on the stochastics too. So we're going to do that one. It's got $34 of risk per contract. You can see the order is not filled yet because you are gray over here. Let's change it. That got us in. Open. Yeah, there it is. Now again, we're short. And right about 84, you've got this ATR. So again, you're going to have to watch it. Again, because you're short, and this is an easy way to actually calculate where your profit target would be, you're risking $36.75 per contract. Your entry price was $63.25. If you minus that by 40, which covers the cost of the trade, your profit target would be $23.25 or 23 even. This is when you can go in. You can actually just set a profit target at 23. That guarantees 100% on your return on investment. Does everybody understand that? I'm not sure that you will get it, because to get that, it's going to have to come down to about 18067. Okay, you have the ATR right in the way. The only thing that you do, yeah, it would be set at 23, Wepper. The only thing you have going for you on this trade is you've had trend divergence. On the stochastics, you've got the ADX showing you that it's going to retrace down to the ATR, and you have volume divergence here with the delta flip. So I'm going to go grab another cup of coffee while we're waiting on this. This one is dependent on the market opening volatility, okay? That's what it's dependent on. Weber, I just saw your question. All right. All binaries pay out exactly $100, okay? We're going short, so we subtract the average price, which is $63.25, and that gives us our risk. Our risk was $36.75, okay? All I did was average up so that I'm actually covering the cost of the trade plus 100% of my return on investment. So I'm saying $63.25, which was the average price on entry, minus 40 equals $23.25. I rounded it to 23. And if it gets there, you know you have made 40. Well, your risk was $36.75. I just rounded it to 40 to cover the cost of the trade, Whipper. That's all. Do you understand? Yeah, I just round it so it's nice, clear, even numbers. All right, let me go grab a cup of coffee and I'll be right back. We got about 20 minutes before the market opens. Okay, I'm back. Now, just looking at this, I don't like that bar that just formed. Usually that's indicative that price is going to go up. You see it here. It made a low and then closed up at the top. I don't like those bars. And normally when I don't like a bar like that, I do one of two things. I'll exit the trade, or I'll say, okay, I'm going to give you one more bar. Okay. And if on the next bar it doesn't do what I want it to do, then I'm out of the trade. Does everybody understand that? And that's the one good thing about Nadex. You can exit at any time. Now, some people will click over here to exit, and you shouldn't. You should either click on the -10 plus 10 if you're long to exit, because it fills in the number of contracts for you, or click on your profit target, which is the gray box, to exit. If you click over here, we're short, so if we wanted to buy, it's going to actually put in your default, okay? Let's say that you only went in with 5, your default's 10 like mine is. Well, then you are only out of 5 of your contracts instead of the full 10. That's the reason if you use this one, it automatically accepts whatever number of contracts you're in the market with. While we're waiting on this, let's go look at crude. Again, you're seeing, see how it came back to this congestion dot? These are just patterns that occur all the time with these indicators. You have a long entry here. You had a long entry here. This one lost money. If you exited on this bar, this one definitely made money. I would have taken the congestion dot to the upside if I had seen it. Of course, the radar screen, kind of hard to miss that one. Let's go look at gold. Again, gold, you see the same things. At the congestion dot, it goes up. Here, you went from 1262 up to 1264. I can't imagine someone letting that profit go. Guess it's always a chance, though. You had an entry here. This one, you probably lost money if you exited on this bar. This one, you would have lost money if you exited on this bar. You turned around and you had another entry here, and that one definitely made money. Let's go look at the ES. The ES, you've only had one entry so far, and that was over here. And that was actually came in last night. On the NASDAQ. And right now, the NASDAQ is really overextended. You did have an entry here. It came in last night almost at midnight. You had another entry this morning at 6 o'clock. And if you took the entry at 6 o'clock or the midnight entry on the binaries, that would be on a daily. Okay. So far, those are the only entries. And again, going back to these congestion areas, this was your entry to the downside. This was your entry to the upside. And again, this is the same pattern that you saw on the USD JPY this morning. You go up to the congestion dot, it will come back to the ATR, then it should break through that congestion dot. That would be your anticipation. These patterns play out over and over and over again. You can tell in the radar screen, you can see automatically everything that is at a congestion dot, everything that is at an ATR. It's right there in your face. And I did that because those are your entry points. For some reason, the dots make it clearer for people to see the actual entry. It makes it easier to go back and show you where entries were, I'll tell you that. From my perspective, anyway. Any questions so far, guys? I mean, this room is for you to ask questions if you don't understand something. I think it's really good with the dots as well, Wepper. Because now I can pull up any chart, and if somebody says, where's your entry? Well, look at the dot. There's your entry. The only difference is, with the binaries, I tend to go out, at least one strike price, sometimes more, depending on whether we have a market report or something. And when I'm doing the 20-minute binaries, the blog post that I wrote yesterday on the 20-minute binaries, I was limiting my risk to less than $30, because when you're trading the 20-minute binaries, you're trading the gamma, and that is the high fluctuation in the premium prices. And they don't start until 9:40. So you kind of get a feel of what the market's going to do before you start entering those. And you have to have a lot of discipline to trade those 20-minute binaries. If this comes in 5 minutes before the expiration, I'm probably not going to do it. Okay? Whereas if I've got at least 10 minutes for this to move in my direction, yeah, I might will do it. In the room, because the GoToWebinar slows down my computer in Nadex so bad, I don't do the 20-minute binaries. So now you see what I'm talking about. See how that bar, the buyers came in on that bar. It is confirmed by the price bar. Okay? That's, why I said it's very indicative that this was going to go up. Okay? It's just price bars and the way the volume works. We're just going to wait to the market opening and we'll see what happens. And the market opening typically is very volatile. Yesterday, it wasn't very volatile. Yesterday, we had some nice congestion zones on the 12-minute, and I actually used the congestion zones to trade the 20-minute binaries. I'm really not seeing a lot of volume on that 180 to break through that congestion dot, but we'll have to wait and see. It is struggling at the pivot line. That's about all I can say for it. And that's the R2 pivot line. I have mine colored according to whether they're resistance line or support lines. My support lines are green. My resistance lines are red. We really don't have any other market reports. Tonight we do have some market reports on the China side. It may actually move the market because China has been moving the market a lot. And we're off. Now remember, the one thing that's standing in the way on the Dow is that ATR at 18,089, which is, what, within 2 points of where our strike price is? The only thing that may help is if we get a magenta peak over on the 45-minute. Oop, I don't know why that did that. Because that would push it down to 18,061. I would really like to see this delta flip to below zero on both the 12 and the 45. But just something you're going to have to wait and see. Are you talking about the open position, Marv? Is that what you're talking about, Marv? Okay. Well, we actually have working order in at 23. And the only time I would go out 2 to 3 strike prices like you see me doing right now is when I'm at a market opening or a market report. Most of the time I'm within 1 strike of price. And I mean, even being 2 strikes out on the Dow, that's the equivalent of 24 points. At the U.S. market opening, you can expect the Dow to move 24 points. And in all honesty, you need at least 2 strike prices more than that, which would be 48 points. Because that's what's going to give you your profit target generally. This is why noticing where that ATR is so important. Because it's going to have to take out that ATR to give you your profit target. Do you see how sellers started coming in because the delta flipped to below 0? And you really need this bar, the current bar, to close beneath the low of the previous bar. That would push it down and make a new low. I'm going to move this for a minute. No, it still hasn't. I like the way that this bar is developing, but I would really prefer that this hash mark go below 0. It just tells you that sellers are stepping in on the 45-minute, which is really good. These little boxes over here that just tells me there's another strike price there. If you click on it, it will actually expand it. Notice how the blue dot is coming in early, so you know, start watching for price to get to that blue dot. Again, that would be your lowest point of entry if you were trading futures. And our strike price is right at that blue dot. And that really means we may not get our profit target. Just like what happened on the USD JPY, we made the 100%. It was actually a little bit over 100%. But you didn't know to take profits. Instead, you get greedy. Well, then you lose your money. You may not go through 18089. Would you sell all or a majority of the contracts? If it approaches that 18089, I would sell them all. And see this, you're very, very tight on that, Larry. So you may not have much of a profit when it gets there. That's why I don't like the strike prices that are close to an ATR. If that magenta peak went starting to plot now, if this one comes in on the 45-minute, it may form the congestion dot over here on the 12-minute, Larry. You just have to watch it. Yeah, you have to buy it back. If you're short, you always have to buy back. If you're long, you have to sell back or sell it. Exactly, just close the position. And this is really, really going to be a tight trade. But see, this is what you're doing when you're trading the binaries. You're weighing your risk with the potential for the market to move to a certain area. And really, you always want to be able to choose the strike prices that are at least 2 strikes above where you think price will go. And I'm trying to highlight that for y'all so y'all can see it, you know. See, right now you're at the ATR, Larry. You've made a little bit of money, but it's not as much as what you would want. That's what I'm talking about. See how it's developing the congestion dot over here, Larry? Now, if it gets to 18,066, yeah, well, our profit target was just hit. Do y'all see that? But it's because that congestion dot developed, and the only reason that it did was because of this 45-minute was pushing it down. Do y'all understand that? And we wasn't trying to get greedy. We just set 100%, made 100%. Do y'all understand that? And you'll see this over and over and over and over again with the binaries. You know, on this one, you know, I told you twice you could take 100%, you could take 100%, but no, we wanted the full profit potential. That's why you lose. Everybody understand that now? See how you're getting that blue dot over here? The only thing that may push this down is the 180 because we're at the congestion dot and there's no buyers in that market. Any questions today, guys? And this is why on most of my videos, you'll actually see me taking 100%, unless, you know, it goes deep in the money and there's just really no chance of it going back against me. And you're weighing really the time factor, you know. In the USD, if you go back and watch the USD JPY, you will see within about 20 minutes we had 100% on that return. Then it turned around and they tried to give it to us again. We didn't take it. Then it went against us. And I don't see a purpose in waiting another 25 minutes just to capture all of it because you're exposing your profit and your risk. And today was a great day of showing y'all exactly why I don't do that. And if this had not been fueled by this 45-minute, we wouldn't have made our profit target. I'll tell you that right now. If y'all don't notice that, you know, it's not that I'm focused on the 45-minute. I just know what I'm anticipating on my 45-minute. I'm really trading the 12-minute, though. But it helps to go into the 45-minute. Any questions this morning, guys? And I'll post this recording later today.